All right, my name is Chris Campbell. I'm a practicing CPA and I work with small to mid-sized businesses to help them pay the least amount of taxes possible while keeping them out of jail. So today I wanted to talk about estimated tax payment and making sure that you apply those estimated payments to the proper place and proper time periods. And the reason why I wanted to speak about this because something that I encounter from time to time is where I see clients and they have the best intention of making sure that they're staying on top of their taxes and they're paying out their estimates on time. But then a couple of things go wrong when payments are made to the wrong period. So what happens is if that happens and causes a bit of confusion with the IRS or the taxing authority that you're sending them into. And then when we do the filings with the expectation that payments were made for certain periods, the return either gets rejected or you wind up getting a notice saying, hey, you owe X amount of dollars when you're almost sure that you paid it, but you're still getting a tax bill indicating that you still owe additional funds. Sometimes that is caused because the payment is put into the wrong period. A couple things to realize is that if you were to make a payment and when you make an estimated payment, and this is more so with the IRS, every state is different as far as how they handle this. For the purpose of this talk, I'm going to talk specifically about the IRS. So with the IRS, one common thing that I see is that we have a balance of 1 year, but then you're also still trying to make estimated tax payments for the previous year. So one common thing that happens is a person will go with the intention of paying their tax bill from the previous year, but then they'll go ahead and make the tax payment for mistakenly, unknowingly apply it to the current year. And then it winds up being an estimated tax payment for the current year and not a payment toward the bill of the prior year. Now, the issue with that is the letter of the law is that, at least on the IRS side, is that once you make an estimated tax payment for that year, they really don't allow you to move that payment around, right? Because the common thing would just be like, oh, well, if you made the payment, then just reach out and they just move the payment. Now, the letter of the law states that once you make an estimated payment for that year, they're not going to allow you to move it back to a prior year or get some sort of refund until that year is closed out, because they want to make sure that they're not giving up money that you've already paid and they know that you're going to owe them. So let's say if you send in $20,000, but then you want to try to move it to a prior bill, but yet you're going to owe $20,000 for that year, but you haven't filed it yet. They want to make sure they get that money. So the problem or the issue that you'll face is that, let's say you make an estimated tax payment at some time in, say, June, right? I'm filming this in 2025. So let's say that you made a payment June in 2025 for 2025 taxes, but you really meant to make that payment for 24 and core taxes that you still owed. The letter of the law states the IRS won't let you move that payment to apply to 24. They want you to wait until they're not going to move it or refund it, I should say. You can't get a refund either on estimated tax payment. They're not going to allow you at least until that year is closed out. So going back to that example, if you make an estimated tax payment for 2025 and you realize that it was done in error, you can't get that money back till you actually file 2025 taxes. And now the earliest that you're going to do that is like early 2026, right? That's like the earliest that you can do it. You can't file a tax return for the year before the year is out. And in most instances, if you're filing estimated taxes, chances are you're not really filing that early anyway, because you got a lot going on. There's a lot that you need to filter out to get your numbers straight before you file. So normally, if you're making an estimated tax payment, usually not necessarily filing on time a lot, at least by the, let's say, the April deadline. Usually you go on extension because you just got a lot of moving parts here. But the point being is that if you make that mistake and mistakenly pay it, it can cost you quite a bit of money, because now it has to sit with the IRS for months, almost a year on end, where you wanted to pay another bill, right? And now, mind you, and going back to my example, you're still on the hook for 2024. So they won't allow you to move it. But yet, if you still owe, your interest is still accruing. So now you got to figure out how to come up with more money to cover the bill, or at least keep the interest if you're going to wait until everything gets filed in 2025. So the point being, it's very key. But that's if you do an estimate. Now, I have seen situations where it was applied to the right year, but to the wrong sort of tax. So if a payment is made and it's applied to the wrong sort of tax, then usually they'll be pretty lenient about moving a payment over as long as everything is under your Social Security. The only issue that you will also face, and this happens with business owners from time to time, if you have an LLC, let's say you're a single member LLC and you have your own tax ID number, understand that with single member LLCs, file their taxes or file their income taxes under their personal tax return. So if you are making estimated payments for what the business activity was, make sure you make those payments under your actual Social Security number and not the LLC. Because again, the LLC files their taxes on the personal side. So the LLC itself technically doesn't pay the taxes. So that's a mistake that I've seen from time to time where the payments are actually allocated to the tax ID number and not the person's Social Security number. So if you were to go and make those payments under your tax ID number, it's a little more, even though you might be the owner of that LLC, it's a little more difficult to get those payments changed. I recently had a client that did that where they were a single member LLC, but yet they paid estimated taxes under their EIN and not their social. There was quite a bit of documentation that we had to send in and to request that payment get moved from the EIN to the person's Social Security number. So that's another common mistake that I may see, not paying to the right tax ID number. So the point being is just make sure or double check and make sure that you're making the right payments to the right places or allocating it to the right periods, because if you're not, it causes you a little bit of headaches in the long run, quite a bit of fixing that you'll have to do. So just make sure that when you go and make those payments, because when you go online, we do a lot of our estimated tax payments online and we'll submit payments online. And then when you go in through the portal, at least with IRS, they give you a number of options when you're going ahead and you're filing. So they'll say, okay, who are you paying it for? Okay, what period? What type of tax? When you go on that online portal and payments, there's a number of opportunities to make mistakes and have it allocated to the wrong place. So make sure you're staying on top of that. Check with your professional to make sure that you're filing it, or just have your tax professional do it if you want to ensure avoiding a lot of headaches down the line. Make sure you're doing the right thing and staying on top of that. All right. So that's all for now. Hopefully this was helpful. And if you have any more additional questions about this topic or any other tax or accounting related questions, feel free to reach out. I'm happy to help. All right.